Hi, everyone. Andrea Williams here with Keen Real Estate Group and our Keen Academy Real Estate Mastery. How to manage your credit. Well, today I've been asked quite a few times by many of our coaching clients and students how to, sort of manage and take care of their credit. They're concerned that their credit score can be reduced or decline with every pre-approval or approval, and especially being real estate investors, that's definitely a concern. But let's take a look at some of the key aspects of credit and what you can do to either maintain your score and what really happens when a credit check is made. So, credit is definitely necessary every single time we're applying for financing and trying to get a mortgage approval for a property that we're buying. But don't be afraid of the drop. There is definitely often some kind of small effect on your score. And we're going to look at how and what those numbers look like. If you're applying for credit, you usually know these are some of the reasons why you have to do a credit check, or a third party is going to want to see what your score looks like, whether you're looking for a pre-approval or approval on an actual mortgage to, as I said, fund a transaction, a purchase that you've made. There's also the need when you are applying for credit cards or cards within department stores. When you're looking for a loan, maybe it's a car loan or a business loan, they're going to need to do a credit check. Also, today, many companies that you work for, such as an employer or a utility company that you're setting up when you're renting or when you're looking to own, and you're trying to establish a gas account or a hydro account, they usually want to have your credit, as well as when you're setting up a mobile phone. That's another time that they ask for it. Definitely today, we're seeing a lot of landlords, when you're going to rent or trying to solidify a place for rent, they're going to want to do a check as well. All pretty standard procedures. So having good scores or good credit is definitely a necessity, because there's pretty much all aspects of our adult life that requires it. And so I truly believe that your concerns are real. Trying to maintain and manage your credit is a very real and important aspect of financing. When you're thinking about some of the facts about credit, I do agree that the each check does have an impact on your score, but they're not impacted in the same way. When you're doing a soft check, or you're doing a check for example, a mobile phone, the score is maybe going to be impacted by about 5 points. So it might decrease by 5 points, and 5 points is not a lot, especially if you are doing all the right things. You could easily have that come back up in the same month or the following month. A hard check, which is often required when you're applying for mortgages and you're trying to get your final approval, is it could impact your score up to 10%. Sorry, 10 points or 10% of your score is impacted by those types of checks. So again, not substantial or significant, because it's much easier to bring that score back up in a short time frame as it went down. Okay, so, but one thing that if you are not ready to sort of take on a loan or a creditor, is that you don't have to let them pull your score. You could offer your report or your score, because when you check and you provide the source of the score and the information, there is no effect on your score, so it's not going to impact it. And that's really important. And plus, it's very important that you're checking it on a regular basis anyway, so that you can know where you stand, what's going on, if anything is showing up on your credit that you need to be aware of, because that has happened to me time and time again, and I'm sure it's happened to you. And if you're not paying attention, you could easily have that affect be substantially greater than 5 or 10 points. It could be in the hundreds of points that it can cause your score to drop. So really, really important that you are managing your credit on a regular basis. And there's so many places that you can use to manage your credit score and keep it in check that are free. Many bank websites, online banking, offer that free, whether you're with like Scotiabank, or if you are looking for some free apps that allow you to manage and monitor your score. Credit Karma, Borrowell, they're all free, and I would highly urge you to utilize them and utilize them both because typically each of them are being reported by a different credit bureau. So, and do be aware that there's more than one bureau that also helps you understand what your score is. There's Equifax, who reports to and provides, and that's the most commonly used one is Equifax. So you should know your score there, as well as TransUnion, who also provides reporting and tracks your credit and your score. And the reason why each of those two scores will sometimes vary and be slightly different is not everyone reports to each of them. And so I do find in general, my TransUnion score tends to be slightly higher than my Equifax score, but all in good faith, they're both pretty good and they both provide, as long as, you're monitoring and keeping track. I do find that I tend to keep them both within, maybe 50 to 75 points difference. And as long as that 50 to 70 points is up in the sevens, I'm not too concerned, meaning the 700s. So it's really important to plan ahead as a real estate investor, as an individual who is moving from being a homeowner or moving into being a homeowner. You need to understand that financing is like a chess game. You have to plan your next move. You definitely don't want to wait until it's time that you need the credit to understand what you have to do, as well as you have to strategize, right? You don't want to make a purchase today and set it up so that it limits your ability in the future to make another purchase or to create another transaction. So it's really, really important that each time you're making a purchase, that you're strategizing and you're buying your property and you're mortgaging according to what you want to do, either in the near term or in the upcoming years. I know that that's something I've always thought to and made sure that I planned accordingly. 10 ways that you can improve your credit score to ensure that you get that 800 score in, say, 45 days or less. I think that many of us want to make sure that we keep our score top notch. And I know that sometimes it's kind of a fun game in my family. We're always trying to see who can keep the highest score. I have not been the winner in the past year or so, and so I've still had a good score, but not always the winner. And my daughter and my husband definitely have been outperforming me in that regard. And it's largely because I am doing a lot more borrowing. I'm carrying a lot more debt, and that does impact your score. But keeping check, I already said this, number one is to check your score and your report regularly. And so that could even be monthly, okay, because things can change and happen that quickly. Number two is to pay your bills on time. And I don't think I have to tell you that. I think you probably understand that. And if you're even paying just the minimum on time and regularly, that will help um, keep your score solid and help improve it. If you've been negligent and not paying on time, start doing that. The on time could just mean the minimum balance that's required to satisfy the lender. Also, make sure that you pay off any collections. If you end up in that situation, you want to target and pay that off first before even taking care of, say, paying out balances on a credit card or a loan that is in good standing. Get caught up on past and past due bills. That is very important. I think that if you get caught up and you get behind, one thing that you can do is negotiate and strategize with that lender or that institution on how you can, have a plan that meets your needs, because it is possible to have something that is different than what is being asked of you, so that you can modify it because maybe you're struggling, or maybe you're in a position where something has happened financially, the pandemic, divorce, whatever it is, changes in our lives create changes and strife in our lending and in our ability to pay and keep abreast of what we were formerly able to do. So just make sure that you're talking to lenders, talking to your creditors, and getting them to offer something that is reasonable and fits your needs. Keep your balances low on your credit cards. I know they say, utilization should be below 35%, but I'm going to even say here, if you really want that 800 credit score or greater, get it to be less than 10. Okay. So what I've encouraged, and when I'm teaching my kids as they're, becoming teenagers and young adults, is to just borrow and put on your credit card and in your realm of what you can pay at the end of the month in full. That is the best strategy. If you're using credit to build your credit and to have the borrowing power, then don't hold large balances that go on end for months and years. Try to borrow and use only what you can pay at the end of the month. Don't close off paid off accounts. Okay. I know you may sometimes be frustrated, don't want them anymore, and you're like, it's not of value to me, but it is. It is of values. The longer you have a credit, history, or a card, a institution that you're with, and your history is longer with them, the better it is for you. And so don't close off those paid off accounts or those old accounts. They provide huge benefits in improving your score and getting that 800 credit score or greater. Uh, Make sure that you're continually continuously taking care of your debt and paying it off, and making sure that you're managing it. That's a really important feature and strategy. You cannot get yourself caught in just transferring debt from one lender to another. It's better if you pay off that debt and get rid of it completely than continuously transferring it. Okay. Also, applying for new credit over a lot of credit and new credit repeatedly over a short period of time, that can have an effect on your credit. And so we encourage you to reduce that need to sort of borrow, get new credit and apply. I mean, you walk into the credit into a store and they they want to offer you credit. Decline it and pass if you don't need it. If you already have a MasterCard or a Visa, why do you need a Canadian Tire credit card or the Bay or what have you? Okay, so also keeping a variety, a mix of credit types is really important. That's huge in improving your score. If you're just starting out, it's typically, you have just a credit card maybe, and that's not enough. If you can get history with respect to a mobile phone, history with maybe a utility company, maybe a loan, such as a car loan or a business loan, any type of variety will help improve your score, especially again, as I said, to get that 800 or greater score and to get, lenders wanting to work with you. And also, we said it already, not to have a lot of new applications for credit over a short period of time, but also just to apply for credit sparingly, and making sure that you're keeping your score low will be needed when you talk about applying for 5 different credit cards in the short span of a month or two. Lastly, don't forget these. I mean, these are just some tips. There's many more. We often hold credit workshops, like such as Credit is Your Superpower. You can always check out that video that we already have and have created for you and for your use. But stay connected. It's the best way. If you have a question or a concern about your credit, or you've heard someone complain about theirs, talk to them. Let them use this video and other videos that we have to help them improve their credit. We also have a fantastic book that can help you with that, and we're open to sharing that with you. If you're wanting to know more, just reach out to us. Join us on Facebook. Check out our website. Make sure that you are engaged in the community. We often have various workshops that are free. Invite friends, invite family. co-workers to attend those so that they can continually get the updated information that they need to make really good decisions about where they stand in terms of credit, but most importantly in terms of getting financing and buying additionally in the real estate market. We're on LinkedIn, YouTube, and we have webinars that we host that give you valuable information on how to build your credit, how to build yourself as a real estate pro and professional. That's it for me today. Look forward to seeing you soon and keep plugging into our educational resources.